on micro future contracts. And basically, it's ICT concepts with moving averages and trend lines, basic stuff, looking for support resistance, looking for variables to agree so that we can get in a trade using the ATM strategies, stop loss strategies that are set on the NinjaTrader platform. And I hope that it works. So we're just looking for a pullback at the moment. Let's find a pullback at the moment. And if it doesn't pull back, then we won't be able to do anything here. And if it does pull back, then we're all set for a trade. Live. Let's see what we got here. Okay, great. Let's see what we got here. Okay, great. All right. So yes, we're using multiple time charts. We use all the way down from, looking for the daily bias. We have to go all the way up to the weekly to see what's going on in the weekly chart. We see right here that this thing probably wants to go over the top of last week. So we're biased to the long side. Looks clearly, this is not a hard day to figure out here. Could it pull back? Could it go sideways? Yes, but it looks like in the bigger picture, even if we drop down into these areas, that it wants to go long. There is a lot of open nakedness here, and there is a lot of liquidity to the downside that has not been swept yet. If we look at the 15-minute chart, look at all this these newly generated levels where stops could be swept, all these different levels. So, on one hand, and look at these giant candles. On one hand, I think it's going to go up. On the other hand, we have to be ready for, head fakes and pullbacks. So I would be interested to see this pull back at least 50% of this leg up and take out some sweeps, sweep some of this stuff, and then come maybe down to the 200 moving average, which is right in the middle of the 50-60% equilibrium zone there. And then I would like to see on our lower time charts, perhaps some trend line breaks. So when it gets down to that level, we would be looking for, let's take a look here. Let's also remember that we are always using our 15-minute and the 10,000 tick chart for our direction. This is the bigger, this is kind of in the middle. This is the direction that I like to trade in. As long as this looks bullish, as long as the moving averages are going up on this 10,000 tick chart, as long as they're going up on the 15-minute chart, then I'm bullish. I'm looking for, here's the 15-minute chart. I'm bullish here, looking for ways to get in this trade to the long side. Okay, as long as it is showing that. Now, if it crosses over, if price crosses under and these moving averages crisscross on the 15-minute chart, usually it happens first, but I more or less watch the 10,000 tick chart. If price were to fall between the 20 and the 50, that is called the caution zone for me. Like right over here, that was caution, but we took this trade yesterday where it broke the trend line down. It was one of the better trades we had yesterday. Took the trend line down and it broke, and we caught that trade up. We're looking for, and we said it would pull back to 50% of this move up, and it did. 50% of this move to these pivot levels right over here. We were waiting for it to come down to these pivot levels and hit 50% and then begin to rotate up and break the trend line, which is exactly what it did. Thank God for that. So now similar things. I think it could pull back a good bit on this. I'm not interested in taking necessarily, for instance, these trend line breaks that we see here and here. It could work. It could work. But I think we will have a better chance. Here's the 5,000 tick chart. If it pulls down and sweeps some more liquidity. Now it's bouncing off the 20 moving average right here nicely on the 5,000 tick chart, which is good, very good. But I think we need to see it dip a little bit more, If this trend line breaks right here, I'm not saying it's an impossible trade, because on the higher time charts, we do have, it looking bullish. However, I guess what I'm saying is sometimes the 1,000 tick chart will look bearish. It's like the 1 minute. The 1 minute and the 1,000 tick charts are very similar. This is just smoother looking. This is very similar to the 1 minute chart. Sometimes these lower time charts, the lowest time charts, will look bearish while we're waiting for our 15-minute or 10,000 tick chart to correct. If this corrects down to the 50% range, if it goes down into the fair value gaps that are established here, let's get rid of that. If it goes down even to this pivot down here, if it goes down to this pivot down here, it will be in the danger zone, the caution zone, but it will still be tradable because the 200 moving average is going up, and the moving averages, as far as I'm concerned, have not crossed under price. As long as price stays above the 200 on the 10,000 tick, we'll be looking for longs. Once price closes below the 200 moving average and closes below and continues to push, like right here, we were not looking for long trades in this until it got back up over the top. Once it got back up over the top, we started looking for trendline breaks, wedges, and we got into a couple trades there. Okay, so right now it looks like it wants to pull back. We're going to let it pull back. We're not going to try to get in too early on this because it looks like it wants to pull back. Let's check out the 30-minute chart here just for curiosity's sake. Let's draw Fibonacci from this low here all the way up. You know, 50% is right at that 200 moving average. It also is right at these pintails where there could be some order blocks and support levels, and there's a lot of liquidity to sweep down to that point. So it could be temporarily sweeping some of this stuff that we see right here on the sweeping these different levels just to set up some buying opportunity or strengthen its buying to go back up over the high. That's kind of what I'm thinking. Here's those two pintails that we saw on the 30-minute chart. Here's all these different levels of liquidity and support that it could go sweep. It could, I say, and that doesn't mean it's going to. It could literally start turning around right here and creating some opportunities. I'm not as interested in taking these opportunities as I am if it were to pull back deeper. Doesn't mean I won't take a trade. It might be all we get. It might be all we get here. If it were to break the trend line, consolidate, retest, show us some bullish activity, you know, it did sweep this low here. Okay, if it gives us a breaker block, some kind of a breaker block with a fair value gap showing us the change of the money flow, I would at that point be interested in taking the long. But I'm still feeling and looking and thinking that this wants to come down a little bit lower. So we're going to be looking for some more of these liquidity sweeps, and then we'll be looking for our PD arrays, our fair value gaps, our change of money flow candle patterns, and see what's going on there. Right now, we're just waiting patiently, waiting patiently. Okay, we just saw on the 5-minute chart an area of a fair value gap right down here. You can actually see it on the 5,000 tick chart too. So let's write that in, 5-minute fair value gap area, but we can also see it on this 5,000 tick chart. So it's very nice to have an agreement. There's also a little area here in the 10,000 tick chart. It's not as wide as this, but a little area where there's a fair value gap, and it's just under that liquidity sweep right here. So this is an interesting area to me. There might be opportunities that work for a one target hit reward on the way down, where it's bouncing a little bit, enough to give us some profit. And sometimes that's all we get. For instance, right here was just enough of a bounce to get profit target that I took earlier today, but it didn't keep going. So again, if there's a trend line break and we can have a low, easy stop loss on it, then something like this, if it bounces just enough to give us a one reward, that kind of thing is interesting a little bit, but we have to be very, very careful. I'd rather wait for a better, more appetizing pullback than a shallow one here. So yeah, it's trying to break this trend line here. Trend line's not actually drawn properly. There it is. If we got displacement up and we got a fair value gap showing on this 1,000 tick chart, that would be interesting to take a long position, but everything's got to line up perfectly. It really does. Using multiple time charts helps us to stay out of trouble too. A lot of times the 1,000 tick chart or the minute chart looks like it's doing something that you want, but if we zoom out a little bit more, like the 2,000 tick chart up at the top right, or the 5,000 tick chart at the bottom left here, we can see that it's not quite breaking like we want it to. Not quite. And I've had to learn that the hard way, because using the 1,000 tick or even the 250 tick chart looks like it, because you want to trade. If you're eager to trade, you're going to look for trades. You're going to want trades to be good that might not be good. Okay, so the 2,000 tick chart minimum needs to look good as well, because I'm not going to jump in a trade necessarily just based on the 1,000 tick chart. Again, it has to do a liquidity sweep, and it has to pull back into some kind of fair value gap or Fibonacci retracement. It has to have another variable that looks good. And depending on which time chart we use on the higher time charts, you know, if we say we use the hour chart here, and we're only drawing it from these pintails, you know, it's not quite at 50% yet. It's not quite at 50% yet. There is a fair value gap right here that it's in on the hourly chart, but it's in the upper 38%, which I guess, you know, for a strong bull run is pretty good for a bounce. Pretty good. So the question is, do I feel confident in taking a trade before it hits 50%, or it may not hit 50%? You know, if we get a bounce before that, I shouldn't be scared to take it, as long as we got some confluences and some agreements and some things going on. Like right here, now that's a pretty good break of the trend line right here. Pretty good break of the trend line right there. All right, stop loss would be here. Entrance would be here. Entrance is coming down. Might get a better price. That candle came down way too fast. In fact, that might not be a good yeah, see, it got rejected on the trend lines up here. That might be a good place to take it, to be honest with you, because now it's pulled back a good bit. Even if it doesn't work, that's a good lower price there. It just looks like it wants to really pull back. I could have just, once it came down into that body, I could have, and then the stop loss would have been very, very tight. I would have my stop loss like that. It does look interesting, I will tell you that. I'd like to see if it comes down a little bit more. This, yeah, see, it doesn't have his mind made up yet. I'm watching this 10,000 tick chart over here on the top left. And I like the two pintails it's created here in this area. It's real challenging right now. Real challenging. This is very questionable. Very questionable. If it I don't want to be as scared to take the trade. You know, it definitely feels like it could go down lower. This big candle right here. I mean, the candles are strong to the upside, but then the next day or two tends to just kind of be relaxed. It's trending up, fantastic, but with each strong move up, it has this sluggish activity afterwards. Okay, so what's so different about this? You know, and that's what's really got me thinking about letting it pull back deeper. Letting it pull back deeper. Well, I'm glad I waited until looking for some trend line breaks on the lower time chart here for quick scalps, perhaps. Sometimes you can get a quick scalp, and sometimes you can hold it for longer. The fact that it rolled off this old support and looked like resistance right here is telling me it wants to go lower. I would not be surprised if it sweeps this liquidity level down here. Would not be surprised. There it goes.